Well, hello, investors and traders. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time we're asking ourselves what happened today, what does it tell us about the coming ones? Do the show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. If you haven't subscribed, reach up in the right-hand corner and do a subscription. If you do that, you'll get a notification each time content is pushed. If we look at what happened today, we actually had a pretty mixed day. Gold continues to spike higher. Dollars getting weaker. The DAX test the lows. We actually had up day here domestically, barely. NDX still down. NDX getting beat up primarily by anything in the big high-tech sector. LinkedIn today down $50 after hours. Google continues to get banged around after earnings. Same thing with Microsoft. All of these big cap tech companies continue to get hammered in this selling that's ensued the market. If we look over at oil was down. It was a mixed day, up and down today. In general, we have moves now in oil and currencies that are racking these markets. Now, last night I missed the show. Unfortunately, I got caught in a whiteout situation in Wyoming and simply spent about 4 hours on the highway trying to make it to safety. It was kind of a bad situation. I thought I was going to make a show, and all of a sudden I was caught in the middle of something that really was quite interesting. I've never been in a whiteout before, but essentially the road disappears and you really can't see where you're going. So anyway, we're back tonight. I want to recap what happened last night, since I wasn't able to do it, and then take tonight's action as well. So let's take a look at these things. Let's start with the charts, and we'll start here with the S&P 500. Now, yesterday the S&P does a hammer reversal. And when you're looking at that candlestick pattern, what you're seeing is kind of this push down, right? Like you saw back here, push down, and then you leave this little top, right, which is what they call the hammer. So you got this long handle, and then the top up there, which is the hammer. Well, if you look at it here, you got the same thing. This is actually a nicer one. You like the open candles, because that says the way these candles work, in case you're not familiar, is that low was the open, that is the close. So that open is lower than the close. That gives you an open candle. So again, long handle, a little hammer top, that's a reversal. Now, usually what you want to do is when you look at a hammer, you want to see, did it reverse, have less volume? In this case, it didn't. So it says it can come down here and test again. Well, it kind of tested today, but not really, which is actually a good sign. Held higher, traded higher, actually had more volume slightly than yesterday, which says at this point this candle's doing a nice reversal and holding, and it looks like it's going to trade higher. Now, the key part here is not that the hammer tested the previous day on heavier volume and still held higher. The key part here is that the hammer was part of a different test, and that's what you're always looking for, is what's really getting tested. This big volume lows high was getting tested. That was what was getting tested. So in other words, we push up, and now we come back and we test into that price point. A lot less volume on the test. That was the test. That was the hammer reversal off that test. That says this thing's going to try to go higher. That's what the read is on the S&P 500. Now, the problem is not the S&P 500. The problem is the NASDAQ and the NDX in particular. Big cap technology just keeps getting hammered away, if we want to use that term again. And so here you got the same thing, big volume low, right? Top is up here. If you draw it across, put it in there, right? So you get under it. Yesterday you close under it. You close under it again today, just barely. A lot less volume as it's testing. But if you stay in there for a couple bars, which is what it's done now, that says that this thing can trade lower and go test this bottom. In other words, it's going to try to potentially push down there. And so tomorrow, in my opinion, we got the employment number tomorrow. Tomorrow is the key day. If this doesn't get out of here, that test becomes real to the bottom of this bar. NDX looks the same, actually worse. So if I pop the NDX up, it's deeper into the bar. Actually, it's about the same. It's slightly deeper, not much, but a little worse off. So test into it, you stay into it 2 bars, that's not a good situation. If you look at the Russell actually did the same test yesterday into this high volume lows high. That's 1,868, closes at 1,010. So you go into it, you test into it, you have less volume, you close over it again today. This also looks like it wants to try to go higher. So really what's holding up the show here is the NDX, and that's going to be what's on the block tomorrow. Now, is it going to be able to do what we want it to do? You know, if you're a bull, is it going to be able to move higher? Well, we have to look elsewhere because we've got a mixed picture, right? We've got 2 indexes telling us yes, another 2 saying no. It's still up for grabs. So we'll look elsewhere. We'll look over in the overseas markets to see that. But before I want to go there, I want to continue on that path that I've talked about before with respect to the charts and what they show you. Now, the last couple nights we've done a couple things. We talked about L's being lows, H's being highs. So swing point highs, swing point lows. How do you get a swing point low? Well, in the case of a low, you want to get 6 subsequent bars where you don't get a lower low off that low. Once that happens, that becomes a swing point low. High is the same way. Right here, we have a high on this particular bar. That's actually it's this bar. Got a little bit higher. It looks like the blue bar. We get a little bit higher. Then we trade down more than six bars at least, right? And then here again, you got 6 bars, and if you go 1, 2, 3, 4, 5, 6 on that bar, this bar becomes a swing point high. Now notice when it does that, it sets the bar lower for the breakout. And so in other words, when you get a move over here, you get the trend transition, and then you end up getting the big sell-off after that. And we can talk about those ideals later, but I wanted to show you the highs and the lows both. I don't get a subsequent high for 6 bars, it becomes a swing point high. And that can happen on the way down. Right here's another one on the way down. Here's another one on the way down. That actually has some beneficial attributes associated with it, and we can talk about those some other time, but I wanted to point out exactly what swing point highs and lows are and how they form and how trend transitions as a result of it. We'll take the trend transition on the next one. Let's go to the overseas markets. I want to show you what's happening over here, which suggests these markets are going to try to trade up tomorrow, and I don't know what that employment number is going to be, but whatever it's going to be, it looks to me like it's going to try to trade up on it. Here's the DAX. So the DAX comes into the lows, right? Here's the swing point low. DAX comes into the lows. Volume here, volume there, less volume, right? You test into it, you get under it, you get back over it, you got lighter volume. This thing wants to go back the other way. So that's the DAX. If you look at the French CACs, you actually got an under over, but that didn't matter. What this is doing is exactly the same thing we just saw the S&P and the Russell do, and that is it's trading into the high of the low with slightly less volume. Again, wants to try to go back the other way. So overseas markets telling us we want to try to trade higher. And what's fascinating about these two markets is that if you go and look at the currencies, you have gotten a huge push up in the euro, right? The euro breaks out. What does it break out over? And we were talking about this the other night. Breaks out of the Draghi bar, right? Once you get over it, that propels this thing, right? Because this range had held for quite a while now. And when you get something that holds for a long time, and yeah, you test over it and you test over it, but you can't stay, right? Now you get the real big push, volume expands, that breaks out that range. What's it going to try to go to? A range expansion. Just finished it. So I would think this is going to try to pull back now, right, off this range expansion. That's probably going to help their equity markets and push them a little bit higher, which is also going to help ours. If we look at the weekly on the euro, you got this high volume high sitting out here that says it can get tested. But in the meantime, you've actually got some more work to do, right? Because this is a downtrending market. Now you've got this big sideways thing going. But this has an ABCD structure to the upside now, and it just about completed a little bit more. And so I suspect you're going to see it complete. You're going to try to set up another one, right, and try to work your way back up to that swing point high to test it. But the currency's moving big, right, hurting the European markets, but they don't want, or at least they can't find sellers at lower and lower price points, which says they're going to flip it around, try to take it back the other way. Over in Japan, you've got the same sort of thing going on here. Remember, the Japanese came out, the central bank there, and devalued their currency. Big spike to the downside, and what happens? It just spikes right back up and takes it all away. That, folks, tells you that it's not going to give it up yet. It's coming back, and if you remember, we actually had a decent test up here on volume. So the volumes were 1.1 into 1.4, and they're coming back up to try it again. Now, I don't know that they're going to be able to break this out, and if you look on a very long-term time frame, the monthly, right, they're kind of getting a rounded bottom here. So it looks to me like, this is not going to give it up that easy. So the currency, the yen, looks to be doing some sort of a rounded bottom. If that continues to push up, that's going to put more and more pressure on the Nikkei, and that's going to be a hard trade for anyone playing that market. So what do we got here? We've got some decent reversals, or at least attempted reversals, in place now, and we've got enough evidence once more to suggest that this market's going to try to trade higher. The risk in a market like this is that you get a big push down, which is what's happened, right? Then you kind of get the sideways, maybe upward trend, but you never really can pull away, and then all of a sudden they go after it again. And so that, if there's anything in terms of the risk factor, that's the risk factor, because you got volume down here on the lows, on the weekly, 266, come over here, it's 260. Now on the monthly, it's a different story, and that's what makes me think that this is going to try to trade higher before it tries to go after the lows again. But that is, for that to happen, is necessary that the market pull away and start to push higher. The longer you hang out here at the lows, the greater the tendency for something to come along and take them out. And that's nowhere more true than over here on the NASDAQ. NASDAQ can't pull away. NASDAQ is just hanging down there. Also had higher volume on the August lows. And you can see here the NASDAQ is going to try to push to this one eventually. That's the October lows. But so far has been able to avoid it. So that's where we're at tonight. Unemployment number tomorrow. I suspect somehow those numbers are going to get this market to try and work higher. I'll catch up with you on the Sunday show. Be sure and tune in there, and we'll look at a broader perspective as best we can. Have a great one. Thanks for joining me, and take care. Good night.